With me on the line now is Capital Network's mining analyst, Sam Catalano, to talk through Harvest Minerals. Sam, good morning.
Good morning.
First off, Sam, tell me a bit more about what they do. What's their focus?
Yeah, so Harvest Minerals is an AIM-listed company with Brazilian fertilizer assets. So it has a number of assets through Brazil, exposed to different parts of the fertilizer market. But the key asset that we need to focus on is the Arapua asset, which is currently starting up production. They've invested a small amount of capital. It's a low capex project, a low cost project with exposure to the fertilizer market in Brazil. Why is that important? Basically, as the world's population grows, we're obviously short on resources across commodities, but also food is an important factor as we move forward. And to increase yields, increase the amount that a farmer can grow, the increasing application of fertilizers is going to become more and more important as we move forward. So a small company with strong exposure to fertilizers, there's some good opportunities available for investors if they're wanting to look at harvest.
I understand they're applying for a full license at Arapua this month. I mean, how are things coming along for them there, Sam?
Yes, and I think there's perhaps a little bit of misunderstanding within the market on what's going on in the license situation with Harvest. Basically, they currently have a trial mining license, which they are allowed to continue to roll on an ongoing basis. They have applied for, or they are applying this month for a full mining license, which will take a year or two to get full approval, as I understand. But I think we must make clear that with the trial mining license, they're still able to continue to mine the product on a trial basis. It's more just a nomenclature issue, more so than anything. They can still mine the product and they can still sell it. I think that needs to be well understood.
Looking bigger picture, what's the potential here for this asset? They seem to be laying the foundations for what could be quite a long-term and sizable project.
Yeah, absolutely. Look, I mean, coming back to this asset and its significance, it's really the main thing to focus on. It's a low-cost project, both in terms of capex. They've only spent a few $100,000 already, sort of getting some of the infrastructure in place. The operating costs are less than $10 a ton. This is a product that they could potentially sell at around $60 a ton. And so the cash margins are very significant. And the real focus here for investors is the cash generation ability of Arapua and the potential that could provide. As we sort of model this project on a range of different sales prices for the project, on the rough size of production that the company is targeting, we're looking at, amazingly enough, between 30 to 80% cash flow yields at current market levels. You're talking about paying back the market cap of the company since sort of a 2-year period. The biggest sort of risk, and I think why investors have been slow to pick up on this, is that fertilizer is probably not a hugely well understood market. I think the product itself, which Harvest wants to sell, is a unique product that has very few comparables in terms of what price it will achieve. But I think that Harvest is taking great steps to actually allay some of those fears. And recently they signed a letter of intent with the coffee producer Veloso for them to trial 45,000 tons of the product at $60 a ton. So that is a huge development and gives us a good indication of where the pricing could end up. So, if we're looking at around $60 a ton in terms of the sales price once they ramp up to full production, that could potentially mean an NPV, a DCF valuation for the company of in excess of 60 million pounds sterling compared to a market cap at the moment of about 12 to 14. Huge potential upside as we move forward and get more and more certainty on the sales price and on the production levels.
Certainly. Sam, you know the management team quite well. What do you make of them?
Yeah, absolutely. So I've had a number of interactions with management. And I think they're very sensible. I think that the key thing that's important to focus on here is that this is a company that could potentially generate a lot of cash in a very short period of time. Management have been very clear that they won't just go and squander that cash on aimless acquisitions, that if there's no reasonable application for it in terms of additional capex in the project, for example, that they are very open to returning that cash to shareholders. And I think that's quite rare for a small cap stock to get management who are happy to look at returning cash to shareholders. And I think shareholders should be quite encouraged by that sort of level-headedness of management. On the project side, look, they continue to be pushing ahead. Obviously, as I mentioned before, the trial agreement for product sales with Veloso is a fantastic win for them, and I think that they're obviously pushing ahead with this project quite well.
Good to get your analysis, Sam. Thanks very much.
Thank you.
Sam Catalano, their Capital Network's mining analyst, talking through Harvest Minerals.